Let's take a look at some charts on Monero for this week's article on Brave New Coin. So full disclosure, I own some Monero. I've owned Dash and Zeek in the past, not currently. I will likely never own Decred, Grin, or Pivx, simply because of their inflation rate. I would not hold Zeek long term for the inflation rate, the same reason. Inflation kills store value in my mind. That may be a wrong assumption. Ideally innovation keeps up with the inflation so that there's value generation. But on these four, I just don't see it. Now, XMR has its own issues, admittedly. You cannot audit the chain, so you don't really know if there's ever exploits being executed where there's hidden inflation, or in the case a few months ago, if not a year ago by now, there was some issues with sending transactions to exchanges that made it look like you had more Monero than you did, which wasn't inflation on-chain, but it was inflation off-chain. It definitely affects price, store value, that sort of thing. In the medium term, not necessarily long term, but something like that would have an effect on price. So if we compare privacy coins, as I typically do, all together, just put it all out there, let's look at the on-chain stats, let's look at the market caps. To me, Monero's default privacy versus all the others, except Grin, which is also default privacy, Dash, Zeek, DCR, and Pivx, are all optional privacy. All of these use a type of mixing to obscure transaction values or obscure addresses. It's like I'm sending transactions from A to B, but in between there's 5, 10, 50, whatever number of addresses. It sort of like cycles between. So you can't backtrack and say, oh, this was the address that's sent to B, because it's mixed up, right? That's the whole point of all of this. That's one way the privacy is done. And you can see in transactions and daily active addresses for Dash specifically, I think their mixing service plays a role in this. And whether it's CoinJoin or Whirlpool or any of these other services, they're all effectively the same or very similar. That'll also spike transaction volume, most likely, depending on how it's done on the chain. So XMR's market cap leads everything. XMR leads everything in fees, which I always say is either a scalability issue or it's being used a lot. It's being utilized a lot. Now, if we look at transactions per day, they're not leading Dash. They are leading everything else, and they're at an all-time high for Monero, which could also be related to the mining switch in October, November 2019 when they changed their algorithm. So that CPU mining was the most effective way to mine the coin versus a GPU or an ASIC. That could be playing a role here in the transactions per day. Definitely playing a role in the hash rate. And it could also be playing a role in the fees because there's just more activity on chain if there's more people mining individually. It's hard to really tease all that apart, like how much of Monero's activity right now is just economic utility sort of stuff, or is it mining related based on the change in the algorithm? I don't think we'll really know until December this year or later, just because we'll have more data and we can say hash rate was falling but transactions stayed up, something like that. I just need more data, I think, to be convinced that the activity on Monero right now is purely economic and not just mining. You can't see Monero's daily active transaction volume, daily transaction volume. You can't see the daily active addresses. Again, this is part of the privacy obscuration stuff. On all the other metrics, it looks fine. Again, transactions, it's second, but it's all-time high. GitHub commits, it's second or third. So it's not like a stagnant coding environment. So if we look at the hash rate and difficulty for Monero, you can see these are the times when they've been very aggressive trying to remove ASICs from the chain. So they had ASICs come out of the chain and they're like, nope, we don't want that. All we'll do is change the algorithm slightly. We'll brick all those previous ASICs. Okay, great. And it looks like, again, some hidden ASIC activity or bot mining activity, something going on. Oh, we're going to change the algorithm again. And their solution in November 2019 was, you know what, we're going to change the algorithm completely to something else called RandomX, which again makes CPU mining more effective than GPU or ASIC mining, so it outcompetes GPUs or ASICs. So you're losing money if you're mining Monero with those, basically. And what do we see? We see a significant rise in hash rate. Now you can't compare the random X hashes to the crypto night hashes, the previous algorithm. So although this looks like hash rate's at an all-time high, again, we don't really know because they're apples and oranges. They're apples and paper clips, right? They're just different. So it's going to take a lot more data to really know in the random X era what's going on here. If there's a lot more mining activity or if this is just the algorithm switch. Looking at the hash rate on the network, I'm definitely concerned for hash rate concentration. So two pools own over 51%. What is this? 58%. So that's problematic. If any one pool owns 51%, that's even more problematic because then they can start doing shenanigans with transactions and censorship and all this other stuff. So in the future, I'd like to see the small pools take a bigger chunk. I'd like to see more pools is always a good thing. Now there's probably an incentive from a fees or block reward perspective to make people move into these two pools. My guess is the rewards are just better. But if Monero had an easy way to just mine by yourself or have some sort of decentralized mining pool, if that's even a thing, I'd be more comfortable with the hash rate distribution. Again, we won't know several months out like how big of an issue this is because the algorithm just switched. There was a big change in the mining environment, stuff like that. Now if we compare Bitcoin's inflation to Monero's inflation, we're right about here. So right now Monero's slightly lower inflation than BTC. After having BTC, we'll have slightly lower inflation than Monero, but overall together they're very close as far as where they're at, somewhere around 3%, 2.5%, something like that. The difference here is Monero will continue a block reward in perpetuity, whereas BTC will have a final supply of 21 million. Let's take a look at transactions per day in the line here and mining difficulty in the fill. And my hypothesis was that the mining difficulty peaks had something to do with transactions per day, at least previously. So anytime mining difficulty peaked, transactions per day went way up. That might be a botnet thing where malware is forcing computers to mine Monero in the background in a hidden way, so people don't really know what's going on. I don't really know what that's about. It does look weird that it spiked and then dropped all the way down. This week over week, month over month rise since October looks much more organic than it did previously, which gives me even more confidence that this is a real stat we're looking at here. You know, I always talk about peaks and troughs and transactions per day. You see it on any chain that has no fees, basically. It'll just spike all over the place and just go back to where it was like nothing ever happened. Anything that you see like that isn't necessarily user activity, right? It's just like a spam thing or one person or one app, one dApp, that sort of thing. But when you see month over month activity like this, it looks more organic. So transactions per day at all-time high. Bullish for any chain. On-chain activity is what it's all about. If no one's using a coin, it's dying in the dark. Nobody cares about it. If people are transacting on-chain, they care about the coin. They care about the fees. They don't mind the fees. So maybe the default privacy here is enabling the rise in transactions. I don't know, all speculation, but just in a vacuum, bullish, definitely. You can see difficulties where it is, but again, you can't compare pre-November to post-November because of the algorithm switch. If we look at the average fees per transaction for the privacy coins, Monero's in the brown here, maroon, red. It's definitely not the leader of the pack, but realistically, it's the highest among the most popular privacy coins. To me, this just looks like PIVX with no transactions on the chain. Doesn't scale very well, or there's some weirdness going on here. But it's no surprise that if Monero has the number of transactions it does, that the average fees are high historically. I mean, they changed stuff a few years ago as far as bulletproofs and what that cost would be on average. So costs have gone way down since, but now that transactions are rising, costs will probably continue to go up. Looking at Google Trends, a bit surprising that transactions per day are where they are, and Google Trends is kind of lethargic in that it's just flat. You can see there's some subtle, if you really stare at this, right, it's not like major. It's like subtle rise week over week. The highest correlation to Google Trends is almost always price, because as soon as price pops up, then there are more articles, there are more people asking, where can I buy Monero? What is Monero? That sort of thing. All privacy coins, especially default privacy coins, are going to have an issue being listed and staying listed on exchanges, especially in Asia. BitThumb is now talking about delisting Monero. OKEX Korea may have already delisted Monero. It's not listed on Coinbase. It's not listed on many US exchanges. So it's pretty hard to actually get Monero, other than like Kraken. Is it on Binance? It's probably on Binance. But it's not broadly listed. It's not sexy from a staking perspective. It's just a solid project, solid use case, does exactly what you want in a privacy coin. All right, let's look at technicals. We've got Bitfinex open interest up top here. In general, it's been pretty flat, over the past year. Nothing too exciting. Shorts came way off in October, November 2018, and ever since then they never really came back, and longs have just kind of declined. Longs are definitely up over the past few weeks. We've got VPVR, yearly pivots, RSI volume, and 50 and 200 EMAs. So in general, it's all about 100, really. 2 digits to 3 digits is where it's at. So that's going to be the resistance on the way up. You can see that in the yearly pivot. You can see that in the VPVR node here. It's good that XMR dropped with everything on March 12th, 13th, and it rose back above this high volume VPVR zone from the previous consolidations. So it wasn't stuck in upside resistance territory. So now we can reconfirm this as support. The 50 and the 200 did cross bearish, but it looks like it'll cross bullish again over the next few days, or a couple weeks, week and a half, something like that. From a trend perspective, it's definitely leaning bullish. We'll see how and when it gets to 100 what it looks like. After 100, it's 120. It's the yearly pivot, and then it's got all these yearly, VPVR zone, and then it's got all these yearly pivots on the way up to 200, and that's probably a ways away, but something to keep in mind. It's always possible. I think there's going to be extended consolidation around 100. I don't think it's going to pop above 100 and then just explode from there. Nothing spectacular in RSI, no bull or bear divs here, which is good. So it's above the 200, it's bullish, right? And it's above the cloud, so it's bullish. Waiting on bullish Kumo twist. It is pretty far from the Kijun here, so price is more likely to go sideways than continue higher highs. Very similar to when we put in a low, price is more likely to return to the Kijun than make lower lows. Just the mean reversion principle. So if this goes sideways over the next 1 to 2 weeks, Kijun will slowly catch up to price, and then it's usually go time. Because it had its consolidation period, the mean has caught up with price, the cloud will flip bullish. Those are the things you like to see if you are bullish in the medium term. Just like here, price rose, it went sideways, retested the Kijun, and off it was. This is like picture perfect what you want to see when you're looking for a bullish breakout. Lastly, looking at Monero BTC, a ton of upside resistance, big psychological resistance at 0.01, and VPVR resistance at 0.11. There's tons of upside resistance here. So again, I don't expect this to just pop through similar to the $100 level on the USD pair. It's probably going to make a higher high, consolidate, make some bear divs, make decisions, and then go from there. I don't expect this to just go to infinity. As far as the trend is concerned, it's below the 200, below the cloud, but it's really been kind of trendless sideways. It has made a series of higher lows, so it doesn't look terrible. I'd be more comfortable from a trend perspective, again, if it was above both the 200 and the cloud. If it was above the yearly pivot, that would be better. If it was closer to 0.01, certainly. What you want to see around 0.01 is ascending triangle, bull flag, pennant, that sort of stuff. You don't want to see head and shoulders. Bear divs are fine as long as they can reconsolidate and move higher. So overall, bit of a garbly mess for XMR BTC. Worth a watch over the next few weeks.